Looking to take your financial knowledge to the next level? You're in the right place. Welcome to Ask Ralph, offering accounting, technical, and financial advice. Whether you're looking to save taxes or improve your business, he's got you covered. Here's your host of Ask Ralph, Ralph Eastup Jr.
Welcome back to the Ask Ralph Show. You know, one of the questions I get asked a lot from people who are coming in for the first time to get their taxes done is, why is it that I should use a paid preparer or an accountant? And I found this article by a fellow by the name of Maury Backman. It was published on February 20th, 2018. And he talks about the 5 mistakes to avoid this year. And I thought this was a really good expose on the type of things that you could avoid by using a paid preparer or an accountant. And, with tax season being underway already, there's a lot of pressure on people to get their tax returns done. And a lot of times, if you don't pay attention to the many details, you may end up causing yourself some strife down the road, either by delaying your refund or even getting yourself into audit trouble or examination trouble. So there are 5 things here that he talks about, and I want to talk a little about each of them. The first one is botching your personal information. And this is a big one. One of the things that you really need to pay attention to, and I don't see this so much with, husband and wife on a tax return, but I do sometimes see it with children, and that is make sure you're entering the correct Social Security number. And while I'm talking about that, make sure that the Social Security number matches the name on the Social Security card. I talked about this before in another radio program before or another podcast, but make sure that your Social Security card matches the name and Social Security number that you're putting on your tax return. Both for you and your spouse if you're married and any children. This becomes really problematic when we have, mixed and blended families where we have multiple last names. The next thing you want to pay attention to is make sure you're putting down the correct filing status. And I get this question a lot. Are you married? If you're married, you really have 2 options, and that is married filing separately or filing head of household. And understanding that will be important. The next thing is listing the wrong bank account information. So if you're lucky enough to be getting a refund and you want to have direct deposit, make sure you put down the correct direct deposit information. It's my understanding, and I haven't confirmed this, but that the IRS does not have an easy way of tracking down refunds that are deposited to the wrong account. So something you really want to take a few minutes and look at. And one of the things that I recommend, and even for my clients that come in and we do their tax return for them, I always encourage my clients to carefully review their tax returns before we submit them electronically and make sure that everything is put in correctly. Inevitably, when we e-file returns, we'll get a kickback from the IRS that says we have a name mismatch or some sort of thing with the Social Security numbers. The next thing to be cautious of is guessing at deductions. A lot of things are changing with the new tax code, but that doesn't mean you can just go make up deductions. Make sure you have accurate records to back up those deductions. One of the biggest fears I hear from clients is, Ralph, what do I do if I get audited? Well, you really have no fear in getting audited if you're taking the correct deductions and you have the documentation to back it up. Make sure you're setting aside receipts for charitable contributions or any kind of write-offs that you have. Make sure that you've got all your medical expenses in order. Make sure that you've calculated all those things correctly and make sure they're all qualifying expenses. Just don't guess at deductions. Make sure you've got your things in order. When we meet with clients, I say to them, listen, this is your tax return. I'm not going to sit here and tell you that I'm going to audit what you're doing, but I really encourage you to make sure you've got all your receipts put together, and that's both at the individual level and also at the business level. If you've got a Schedule C or an LLC or S corp, you want to make sure that you've got all of your receipts in order, just in case you get audited. The next thing is failing to report income, and this happens a lot. I see this a lot of times with 1099 forms, and those are the forms that you get from the bank or an investment company. A lot of people will just not even pay attention to them. They think it's junk mail and just gets thrown in the shredder or in the dead letter box in your house. So you want to make sure that you're reporting all of these things. I don't know how many times over the last 15 years that I've had clients, come and see me in the middle of the summer and say, hey, Ralph, I got this notice from the IRS and it looks like you messed something up. And I'm like, well, let me take a look. And then I'll go back and look at their source documents and I'll say, yeah, wait a second, George, you never gave me this 1099 from this investment company. And so what happens is the IRS will make an adjustment because when this investment company companies create those 1099 forms, what they do is they send a copy of those to the IRS. So, generally 6 months to 18 months after the tax season, the IRS will start matching those things up and make sure that those things are on the return. So that, one of the things we do from an internal control standpoint is we make sure our clients had the same documents as last year. And if something's missing, we'll say to them, hey, George, I noticed you didn't have your 1099 from PNC Bank or Wells Fargo. Now, sometimes it's, they close the account, but the unfortunate part is I can't guess what they didn't give me that they may not have had before. Now, another big area here is filing on paper. And I get this question, not as much now, but I still get it sometimes. A lot of people get scared of the whole electronic filing, but my opinion is you're a lot less likely to have issues with an electronically filed return. I also believe that it cuts down on the mistakes. Like we talked about in the first part of this section here was that, information mistakes, name, social security numbers, date of birth, it's going to pop those things out. So that way, you're not going to have those errors. And one of the statistics that's noted here is that first of all, you're statistically less likely to make a mistake if you submit an electronic return. The IRS reports that the error rate for paper tax returns is a whopping 21%. That's big, where there's less than a 1% for electronic ones. And bottom line is if you're due a refund, you're going to get your money faster if you electronically file. Now, I'm not trying to make social commentary about the Postal Service, but the truth is I feel that electronic filing is safer as well because you're not putting your social security number and all of your banking information onto documents that you're sending through the mail. Now, the final thing is filing late. Now, listen, we're getting ready to get close to the business filing deadline here on March 15th. And then, of course, the personal filing deadline is not far behind on April 17th. But one of the things you want to make sure of is that you're absolutely filing on time. Because if you're submitting your return late, you'll be penalized to the tune of 5% of the amount you owe per month, up to a maximum of 25%. That's 10 times the monthly penalty you'll face for filing your return on time, but paying your tax bill late. One of the things that I recommend to my clients, is to make sure you get in contact with us and file an extension before that deadline. But you got to keep in mind with extensions, and I get this question a lot, and people will get upset with me after the fact when they get a notice or a bill. Filing an extension gives you an extension to file, but it doesn't give you an extension to pay. So let's say, for example, you've got your information together, but you just don't have everything you need, and April 17th is fast approaching, and you file an extension. Well, on the extension form itself, it asks, how much do you think you're going to owe, and how much are you going to send? Well, I will tell you in practice, most clients don't send anything, but what happens is, let's say at that point you don't know how much you owe, but let's say we do your tax return a month later and you owe $2,000. Well, you're not going to get a penalty for late filing, which is a good thing not to get, but you will get a penalty for paying late. So just remember that an extension of time is an extension of time to file, but not an extension of time to pay. So if you're thinking that I'm going to file an extension to avoid paying, you're not going to make out well with that, and you're going to end up owing penalty and interest. Now, if you need extra time to get your ducks in a row, well, then that makes sense. But if you're doing it because you already know that you owe and you're just looking for a way to get out of owing, not your best option. Well, I sure hope these things were helpful and these 5 things to avoid.
You've been listening to Ask Ralph, brought to you by Saggio Accounting Plus. Please subscribe to and rate our podcast on Apple Podcasts or wherever you get your podcasts, and leave us a rating and review. Our podcast is produced by Carolyn Peters. Thank you for listening, and be sure to like us on Facebook and follow us on Twitter at Ask Ralph Media. You can also hear me each week on 1450 WILM and on 1410 WDOV in Delaware, and on the iHeartRadio app. Submit your questions or ideas for future shows by sending an email to AskRalph@AskRalph.com.
The information contained in this episode of Ask Ralph is based on data available as of the date of its release. Saggio Accounting Plus and Ask Ralph Media Inc. is under no obligation to update this content if changes occur. Applying this information to your specific situation requires careful consideration of all facts and circumstances, and any information provided is not to be considered as financial, tax, or legal advice. Please consult your tax advisor or attorney before acting on any material covered.